What is up, YouTube? It has been a while since I made one of these videos recapping the price action that occurred today and just seeing how you could have traded it. So if you've been on my streams, you would have noticed that I always start off my analysis on a higher time frame. So I like to look on the daily, 4-hour, and then drop down to the 1 hour and the 15-minute. So looking on the daily, I took the last 20 days worth of price action and I drew a gone box from the high to the low that it was, and I just wanted to see how price was reacting to the premium and discount levels. So dropping down into the 4-hour chart, we see here that yesterday during FOMC we were inside of our discount range, and we ended up getting a liquidity sweep here of internal liquidity, and that is why I had marked this as liquidity grab question mark question mark question mark, because we were not getting a 4-hour candle close above the opening of this candle. This candle is very important because this was the one that drew us into that liquidity, and a close above that on the 4-hour would make this turn bullish for me. So that's why I had marked out need 4-hour close above to flip bullish. So yesterday during FOMC we had that close above, and so now I was bullish. We had been just consolidating between premium and discount, and because we had impulsed out of discount, the only obvious target from there would have been the external liquidity, which was all-time highs. Now that is what we got this morning. So once we had swept all-time highs, what would be the next thing that price might want to do is come back into this inefficiency that we created here, otherwise known as a fair value gap, to be able to have another leg on up. So today I came in with a bearish bias, and looking at the 1 hour, we were just slowly moving on up overnight. We had a little bit of a trend here on Asia. London had come up, came back down, bounced off of midnight open. So that was very key, right? We know that with quarterly theory, the opening of Q2 is the true opening level. And that kind of serves as a barometer to know whether we are going to be bullish or bearish. Typically, if you are bullish, you would like to go long under midnight open or the true open. If you are bearish, you want to go short above that. So we saw that London came down, tapped into that midnight open, and impulsed out of that. So for New York AM session, we ended up getting that move on up. So my idea for this morning was that if we ended up getting a cross into this liquidity, I wanted to see a breakdown and target at least midnight open. So as you can see here in the PM session, we are getting that, but I took a couple of trades, or I took 2 trades today, and the first one did not play out because we had a lot of choppiness in AM session, and the move actually occurred in PM session, so I was not able to catch that. But regardless, there were many good opportunities in AM session, so let's get into it. Now, with quarterly theory, I like to look at the micro sessions. The micro sessions are essentially, if you take the AM session, which would be Q3 of the day, you break that up into 4 quarters, then you take each one of those quarters and you break it up into 4 quarters. Those are the micro sessions. This morning in pre-market, I saw that we were accumulating here, and right here at this level was the all-time high level. We manipulated up, took out liquidity. We ended up having a change in state of delivery like I usually look for, but I did not take this one. Why didn't I take it? Well, it was because we were still in manipulation. We were still in Q2. I ideally like to have my entry pretty close to Q3, if not within Q3 itself. So here we see that we did sweep it one more time. Now, what was the candle that brought us into that liquidity pool? Oops, where did that go? Give me 1 second here. So which candle brought us into that liquidity pool? Why does it keep doing that? This one right here. We take the opening of that candle. Now, if this one was also a green candle, then it would have been the open of this series of green candles. You have to take the last series of green candles that swept liquidity at a high, and the last series of red candles that swept liquidity at a low to know if it's a change in state of delivery. So you would want a candle close below that. Now, ideally, my entry would have been at a tap of this level once again with a stop at the high, and we see that we get that filled in Q3. Now I was just a little bit nervous this morning, so I wanted further confirmation to see a candle close below that low right there. So I entered pretty much at the close of this candle here, which confirmed to me that we were going to continue to see more downside. So my initial target was midnight open, which was, I believe, down here. Yeah, like around this level right there, which would have given me a nice 1 to 3 risk to reward. But here is where you could have used standard deviations. If you look, you take the fib, you look at the latest manipulation that went into liquidity, you take the swing high and the swing low that was created to do that, and you target your 2 to 2.5 negative 2 to 2.5 standard deviation. Why? That is the area where price could reverse. What did we see? Let's say we put our take profit to this level right here. That's still a nice 1 to 2.4. It was coinciding with this. Here during this quarter, we ended up getting a reversal of that. So you could have held on, or you could have taken profit pretty darn close here to this low, and then put the next one over to break even, and you would have gotten stopped down in that last piece. Or you could have degened it and just continued holding, and what ends up happening, we tap right into the -2 standard deviation, and we reverse out of that. Back up we go. Now that reversal would have been super easy to catch. If you look here at the next micro session after the 9 to 10:31, so from 10:30 to 12, we typically accumulate between 10:30 to 10:53, which we have a range. Then from 10:53 to 11:15, we have a manipulation move where we take out an old low or a high. In this instance, we took out that low right there from the accumulation range. Where was that change in state? It's this series of candles. Now, this one took a little while to confirm. Typically, I don't like such an extensive move down to confirm the change in state. You could have just waited for this retracement to see if it ended up holding, and then you could have gotten in here, targeting this high right there. That high right there could have been a target as well, and potentially even the all-time high area, which I don't know. I don't think we hit that again. No, we got really close, so you could have been trailing your stop on that one. But regardless, accumulation, manipulation down, distribution up, and continuation. Now, because you are expecting bearish action for the day, we didn't get it in New York AM session. So what does that tell you? We more than likely will see it in the PM session, and look at that drop. We ended up getting it there, and we ended up actually getting a close below the -2.5 standard deviation, which means we're gonna hit the -4, and we just tapped that at the making of this video. It's 2:43 p.m. You see that we tapped into the -4. Now, how could you have played it here? Take a look at this micro section right here. We have accumulation once again, moves on up, taking out this high right here as well as this, so relative equal highs. Find out where that change in state of delivery is going to occur. You look for the series of candle that took out liquidity right there. Your entry is now the change in state, so the tap into it again with a stop at the high, and you could have targeted your low hanging fruit, which would have been those lows right there. That's a 1 to 1.6. Could have targeted this low right here, 1 to 4. Could have targeted that low right there. That is now, keep doing that. That is now a 1 to 6. And if you really wanted to hold out for that move, since now it is PM session, so you're going to have a whole new injection of volatility, you could have definitely seen that full expansion move down to the -4 standard deviation, which would have been a 1 to 11 risk to reward. That ended up getting hit. Taking a look here, boom, beautiful. That would have been a sick trade. Imagine you took this trade today. Now, it takes a lot of patience You know, I was wanting that, but typically between 12 and 1:30, I'm busy. I'm never usually at my computer. So unfortunately, I missed out on the move that I wanted. I ended up green on the day because I took profit here on one, stopped out break even. Here I took a very, very, very quick scalp because I realized I was wrong. I looked at the micro session and we saw that we had that manipulation move down, and that's why I got out of it. But look at that. If you miss it, if you miss the move on a micro session, just wait for the next one and look at the macro scale of everything to see, are we at the target at a higher time frame? Are we at the drawn liquidity on a higher time frame? If not, look for a macro session. See if you can hop on the bus somewhere around there. Or maybe the bus hasn't arrived yet, and this is where you should have gotten on. So that's the way I use quarterly theory. You know, I look at the overall big picture of everything, and because I wanted to see us sweep external liquidity and then come back into internal liquidity. What is a good area of internal liquidity? Well, I think a very good place to target would be this 4-hour fair value gap right there. So that low right there is a very good target. We could see this tomorrow and then have another move back up. So we'll see what happens, but this is how you could have played this. It was very easy to read as long as you come into the market very patient. Don't rush it. You know, you will see this as you start to practice and train your eye. Now, this took me a while to get. It wasn't overnight. But if you are just patient and you manage your risk well, you're going to end up catching these moves. I mean, I can't tell you how many times I've lost trades. I zoom out, look at the bigger picture, wait for the next micro session, and I make back my loss and some. That's because the risk management is on point, the discipline is on point, and the patience is on point. That's all you got to do. You just got to wait. You got to make sure that you know what you're looking for on the higher time frame, and then find an entry on the lower time frame. That's it. It's very simple. So I hope this video helped you guys. If you guys have any questions, you know, feel free. Follow me on Instagram, TikTok, DM me there. If you are in the Discord that I have with my friends, feel free to drop me a message, or you can look me up on Discord and DM me on Discord too. So yeah, we'll see what tomorrow brings. Today was very easy in terms of a read, just took forever, which is annoying, but it still played out. So God bless, guys. I hope this was a good day for you. Peace.